doesn't care about you. That's why you need a medical emergency kit. It contains life-saving medications like ivermectin, Z-Pak, and antibiotics. Stock them before they block them.
So we are in the factory in Kentucky. This is Alp World HQ, and we are at the end of the packing line. So I'm going to show you how it works. We have the card, throw that in there. There's a packing slip, and then you have the Alp. And 4, but that seems honestly like a lot. 3 now, but it's good. These pack a punch that, for a normal nicotine brand, it'd be like 8. We think 3 is fine. Next one. Again, 4. Let's throw 3 in just to keep it fair. Okay? There you go. So you can see you can get fast at this. And really, it's just a matter of repetition. This is kind of the assembly line that, Henry Ford devised so long ago.
Tucker stealing all the Alp again.
Ed's been a friend of the show. I've interviewed him many times, and he's always been straight up. I'm a ex-bond guy, so we kind of have an understanding there about the markets and how things work. But I do value his insight because he's like Rob said, he's kind of a leading indicator kind of guy. I mean, he's the guy you go to see what's going to happen, next week or next month or next year, and that's what his group, Phinance Technologies, spelled with a PH, and they've got a great report if you go to their website on really what's going on in the markets. It's available there at Phinance Technologies. So I'm going to run this interview from Ed, we did with Ed a couple days ago. I think everybody will love it, and we'll talk about it afterwards. Welcome back to Output. We are honored to have Ed Dowd with us. He's a friend of the show. He's been on many times with Phinance Technologies, former Blackrock portfolio manager. Ed, thank you for getting up early in the morning in Maui and joining us. I appreciate it.
Thanks, guys. Good to be here.
So let's get right to it. You're right. We had you on previously, not too long ago, and talking about the false economic data and what's coming out in the insurance data and all the vaccine impacts on the economy. So I'll let you start off and tell us where you are at the moment on those issues.
Yeah. So basically, the last 2 years have been a combination of the government juicing the economy with unprecedented deficit spending. We're running 8% of GDP deficits, which is crisis level. The great financial crisis was 10% momentarily. And what was the crisis this time? To get Biden and Kamala reelected. And that didn't happen. But what they did was very interesting. So we were one of many firms and economists calling for a recession at the end of 23, beginning of 24. We were wrong. And we tried to figure out why we were wrong, because we had to ask ourselves, have our early cycle indicators that have good history and preciseness, suddenly have the laws of economic fundamentals changed? Well, the answer is no, they haven't. Basically, we had unprecedented government spending to the tune of $2 trillion deficits, and they spent them on 2 things that really drove the economy. Illegal immigration, which we're starting to find out, that was a purposeful, logistical, deep operation. We're going to find out how much money was spent. I back of the envelope, we think it's anywhere between $500 billion to $1.5 trillion, all in economic costs. Because what people have to understand is you had to get them from Central America to the border. That costs money. Then you had to get them over the border. Then you had to transport them into the country. Then you had to house them. Then you had to give them benefits and monies to get started. Most of them didn't find jobs. That was the other thing. The jobs reports were false and fraudulent for the last 18 months. Zero Hedge and others pointed it out early, and we did a deep dive, and we found that the Bureau of Labor Statistics non-farm payroll has just been to the upside wrong. You could say it was either fraud or bureaucratic incompetence, or a combination of both.
It's very CCP-like, I mean,
yeah,
you can't trust their data.
It was unreal. And there's two reports. There's the non-farm payroll, which is the most important market report every month. That's what the bond markets and the stock markets key off of the most. And there's big moves around that number. Those numbers are wildly positive during the Biden administration's last year. And there's something called the quarterly census of earnings and wages, which, I think you and I talked about this. This is a report that none of us have ever cared about in our whole careers, because it's a lag. It's the official numbers done with a huge lag. So we just got the September QCEW, which is the actual, and the numbers are way off from the official payroll statements. The June was so bad, it was a 7 sigma deviation, which is basically fraud or incompetence. 7 sigma is unheard of. And that was 1.25 million jobs over the year to the downside. So reality was not what we were seeing. So the asset allocators for a lot that were keying off of the non-farm payrolls were keying off of bad, bogus numbers. That's number one. Number two, the all-in cost from the illegal immigrants was not just the illegal; it was the NGO system. We're finding out this NGO system, it's a web. It's rife with fraud and grift, and that is going to unwind as well. So, and then we had unprecedented government employees added to the payrolls and spending. I asked Grok what percent of GDP growth over the last 4 years was government spending, and it was 20%. Wow. So 20% of our GDP was government. You add in the illegal aliens, that's another, I had Grok calculate based off of my back of the math envelope calculations, that's another 15 to 20%. So 40% of the growth were these two things. And what's happening? Trump is locked down the border. Border encounters are way down. And we had self-deportations starting to happen when Trump got elected. So this is already affecting the economy pretty quickly. And we're seeing it in new tenant rents. The illegals don't buy homes, but they support the housing market with rentals. The new tenant rents have already started dropping. Big drop in the fourth quarter. And it's a volatile series, so it might come back a little bit, but that's an early indication that inflation is going to be coming down, and we're going to see bond yields coming down. And that's the most important thing for anybody who's an investor, is the long end of the bond market's coming down. And we put out a report on Jan 9th, and the timing was not because of our report, it was just coincidental and we got lucky, but bond yields peaked on the 10th and they've been coming straight down. So the long bond and the 10-year have come down quite a bit, 50 basis points.
Well, that's part of the
Trump
Trump agenda, right?
Yeah, absolutely. And so, if Trump does what he says he's going to do, bond yields are going to come down because the economic growth is going to slow. This false economic growth is going to be taken away. There's going to be a valley. There's going to be a dip. We think there's going to be a housing correction or a crisis, mini crisis. And that's already baked into the cards. That's endogenous to the system. The housing market's been fragile for months. New permits have already rolled over, which is an early warning indicator that the new home builders are seeing weakness and can't sell what they got already. So we expect the only thing that can really get a home affordability lower at the current prices is prices itself, because there's no job growth, there's no real economic activity, and demographically, we're hitting a bit of a millennial wall, kind of peaked out in 24, 25. So the millennial demographics are working against us.
Rob, you got any questions?
I do. Ed, I got a long background, a couple of decades in the mortgage banking industry, and I got some anecdotal data to share with you. Just if this wasn't so true and comical, you'd have to cry. But my wife was just at a conference. A loan officer last year did $100 million in loan production. They're whining and bitching and moaning and hating Trump because they're only going to do $30 million in loan production this year. And my wife said, "Why is that?" She goes, "Because all of his business was with illegals. He doesn't have any more business. His business dried up." And she's mad at Trump because they can't loan mortgages to illegal aliens. So that was point number one. Number two was, isn't the Fed both legs cut out from underneath them, the inflation and the jobs, the two things that they say are their mandate? Their excuses are gone. They have to cut, which is a risk on asset move, correct?
Well, usually it is, but not in a slowing economic growth scenario. In the tech bubble, they started cutting before the top in the stock market was, I believe, March of 2000. They started cutting in May, and they cut all the way down into a 50% stock market decline. In the great financial crisis, the stock market peaked in December of 07, but they started cutting a couple months before. Typically speaking, when you're having a credit contraction, which is what we're going to see going forward, their cuts have a temporary effect on risk on assets, but they're usually behind the 8 ball at this point after an interest rate hike move. After the Fed raised rates in 99, 2000 after Y2K, they raised rates again in 06, 05, 06, 07, then plateaued, then cut. When you get the plateau and the cut, that's when the real damage comes. And they started cutting last summer. And we think the Fed's going to probably settle Fed funds anywhere between 2.5% and 3% when it's all said and done. And there's going to be deflation in assets. And it's needed because the stock market, you got your bond guys. I'm both a bond guy and an equity guy. I worked at HSBC as a fixed income salesperson. The stock market was a joke. I mean, the last 6 months of the stock market was a very narrow stock market. The breadth was awful. Semiconductors peaked in July of last year, which are a leading indicator. So this market was poised to have the rug pulled out from under it. And it was just a matter of time. And, people are blaming Trump's tariffs. I'm blaming the fact that the economy is slowing in absolute real time. And you got to think about this. Of the 133 million employed, we have about, I found an estimate. It's not a pure estimate, it's an estimate. There's about 7 million NGO employees. They're all frozen and scared because of the funding cuts. We have government workers, that's about 3 million. They're petrified. And then we have the illegal aliens that are petrified. And that's like 25 million people that we're getting government goodies from the taxpayers that are now pausing all their spending. And that's happening in real time.
Not to mention the people from 100 to 230 years old getting Social Security checks and all the other insane spending that's on top of that.
Yeah, well, so let's talk about just that Social Security fraud. I think there was something like to the tune of 14 million fraudulent potential recipients. Let's say they turn those off. That's going to, even though it's fraud, and maybe some of it's overseas, but the domestic fraud is going to affect consumption immediately. Cutting government expenditures has an immediate impact on consumption, immediate. So that's why we're seeing this quickly. If you look at the airlines, they all reported earnings misses because government bookings are down 50%. And that also means consulting bookings, which feed a lot of consulting businesses government related, they're down 50%. That's only 4% of the airlines bookings, but it's the price setter because they're price insensitive. So this is already, we already had a weak real economy, and that's, we should have had a recession. So the middle class voted in Trump primarily because they're already in recession. And it's been this fake, look at the index, the stock market index, everything's hunky-dory. It was 7 stocks. We've seen this before. Same thing happened in the dot-com bubble. It became very narrow. In the 07 top, it was very narrow. And in this top, it was ridiculously narrow. And now Wall Street's crying because they're over-levered, momentum-chasing trades are unwinding, which, I'm not crying for Citadel.
Yeah. So, Ed, how does this rollover $7 trillion impact the markets, or does it? I mean, are rates going to be low enough so it's not an issue, or what do you think?
I think it's going to happen over time, and I think they're going to get it done. I think, and this is a process. This is. People think we're going to have a crash. I don't think we're going to have a crash. Crashes are very rare. They're usually credit events. We could get a credit event later if the feedback loops really accelerate, and there's hidden fraud that we don't know about. I mean, there's also these exogenous events that we can't control, like the Bank of Japan blowing up. We know there's a problem with the yen carry trade. Japan is caught between a rock and a hard place, having to raise rates to defend their currency or, support the yen carry trade. So that's a black swan event out there. We have potential geopolitical conflicts out there, but just endogenous to the U.S. economy, it's going to slow as we transform and restructure the economy, and it's not the end of the world. So I view this more as a 2000 kind of situation where it's going to take a year or two to kind of take the froth out of the stock market bubble. That's about 50. If we go back to pre-COVID highs of 3,300 in the S&P, that's 45%.
Yeah, it's obviously teetering as we speak. where do you see in the vaccines, the data there? Are you getting any updates into the, excess death and all that and how it's impacting people, or are you still following that?
Yeah, we've kind of shut that down. We're focusing on our financial work, and honestly, we did a lot of work for free, and free doesn't pay the bills. But Swiss Reinsurance, let's use their numbers, and our back of the envelope calculations are similar. They say that there's going to be 5 to 10% excess mortality for the foreseeable future, maybe 5 to 10 years. Now they blame COVID and tell you to take the vaccine, which is absurd, but that foots. The good news is booster uptake is down. The bad news is 5 to 10% is a disaster. And one of the problems I have is, look, I like a lot of what Trump's doing, but the mRNA issue and the COVID issue seems to be off the table in the Trump administration. It's kind of a subject you can't talk about.
I think that's Susie Wiles is doing, but she was getting pharma money until recently. Rob, what other questions do you have for Ed?
Let me shift real quick, Ed, philosophically. I have the mentality, and I'm sure you've heard, all taxation is theft, right? I mean, all spending, government spending is theft for the most part. When they take it from us and spend it to juice the economy, government doesn't create anything. They just redistribute our stuff. That being said, Elon's not joking, I don't believe, when he says, why don't we take this treasury and maybe put it on the blockchain so we can have real-time live data feeds? You can do your work better. We can see what's going on. Transparency is the greatest disinfectant. The mechanics, the distributed ledger technologies, the railing, the digital architect, it seems to me we're moving from a Blockbuster era to a Netflix era. What is the practical reality of all of these ISO 20022 standards, blockchain, token, the digital asset reserve stockpile, and what's your take on where we are in that play?
My partner Carlos Allegri is going to write a piece on Bitcoin and crypto and how it could be used to facilitate transparency in the government. But we don't necessarily want that to become the universal standard for us. We don't want people to know exactly what we're up to, because that's a privacy issue. So there may have to be a dual solution of public spending has to be transparent and private is private. So there's a lot of debate, because people will say to you, Rob, oh, if we do that, that's a CBDC backdoor. That's backdoor control. So this is a debate we have to have, and it has to be a private public solution. It can't be one standard fits all. But the government definitely has to show us everything.
Well, Ed, just to hit on that one point, because that is the lever point of fear that people are using to try to sow division and confusion and get people not to unify. There's been a congressional act, there's been an executive order, there's been a campaign pledge, and they're on the books. There will not be a central bank digital currency in America, full stop. And a stable coin with the Genius Act that passed through the Senate Finance Services Committee yesterday, it is not a CBDC, and there will not be one by law, by executive order, and by promises made by Commander-in-Chief Trump. So I know people like to talk about that, and we get and we debate that like crazy, because CBDC has been demonized, and we should never have one. It rightly is demonized, but that's not the plan, from my understanding of what the new architecture is going to include.
Well, at the very least, government should be transparent. We should know exactly, like the fact that Elon found $4 trillion worth of payments from the Treasury that, he didn't know where they went. That's all you need to know. That's a joke. And, you and I, the three of us have known there's been fraud in the government. Even I was surprised to the upside at how ridiculous it was. And, look, case in point, Stacey Abrams gets $2 billion for an NGO she formed a couple months ago. That is a joke, absolute joke. And there's speculation right now, and this is not proven, but there's speculation that these NGOs don't necessarily have to put their money in a bank. They can invest in stocks and derivatives. So there's speculation that some of these NGOs were whipping things around in the market, basically unregulated hedge funds.
Yes.
Wow, that's an interesting concept. We'll have to talk about that some, Rob, on offline. Yeah. What else, Ed? Is there anything else you're like really, really like, this is, people need to know about this subject?
Well, I think that the thing that people aren't paying attention to, it's the elephant in the room. It's the legal immigration really impacted the economy. It really juiced things, and it juiced a lot, and it held up the housing market. And to Rob's anecdote, that's a terrific anecdote. I mean, the fact that that's all going away under Trump is going to cause prices to come down, which necessarily isn't a bad thing. This is a great thing for people who have been sitting on the sidelines. But the risk to a housing problem is a credit problem. So that's what we have to watch and make sure, hopefully the banks are in better shape this time. But as you know, and we know, whenever there's excess, the fraud, the new shadow banking system, we don't even know where it is. It'll blow up, and it might have knock-on effects.
Yeah. Let me ask you this. I just thought of this. Trump is obviously working to put pathways in place to be able to pay down the debt quickly. This $5 million immigration, payment and other things, that cutting the spending. You think there's a chance that he could seriously impact the sovereign debt of the United States in a positive way?
Well, the problem with having a recession, as you know, the deficit's going to temporarily explode in a recession. But I think if you can get at the discretionary spending, that will keep the bond markets at bay. And I think we have a good chance of, as we grow out of the recession with the new restructured economy, I think things will be fine. And I want to, I don't know if you saw I think the deficit numbers for February came out this week, and everybody was up in arms, record deficit. But I asked Grok to do a quick analysis of the discretionary spending. And it said it only has preliminary data. The data is going to come in a month, but it said from what they can see, discretionary spending stabilized to maybe was down a little bit. And I think the bond markets are sniffing that out. Even though the entitlements raged ahead, Trump has already, with what he's done, tackled discretionary spending a little bit. And you guys know in markets, it's rate of change and second derivatives. Second derivative is going the right way.
Mm-hmm. Interesting. Go ahead, Rob.
Todd, I got the interview. Have you ever read the book Creature from Jekyll Island?
No, but I've read synopses of it, and I've heard many people talk about it.
So, in essence, we're a debt-based economy, not an asset-based economy. We went from having gold-backed, currency issued by the Treasury to paper backed by paper, as the Argentine president's famous for saying, right? I mean, who buys the Treasury and who prints the money? And it's I trust you and you trust me, so I'll buy your paper and you sell me your paper, and it's backed by nothing but slave labor, me and you, right? The assets aren't there. So we're switching it. My life's work and research, from investment banking to computer science to military to politics to debt markets, I see that we're turning the world upside down from a credit-based debt slavery system to an asset-backed sound money system with interoperability on a level playing field. These are all buzzwords that Trump has been talking about his entire career. He's moaned for 40 years about, currency exchange wars, and playing these games by swapping the currency rates, and all of a sudden all of our manufacturing leaves America and goes to China. They play games with the monetary system. So if we're going to switch back to a asset-backed system where money is sound again and we're not drowned in debt, my understanding is that those rails have been built for 15 plus years. The Abraham Accords, the trading agreements, the ISO standards, the digital asset reserves and stockpiles. And it's led to the RLUSD, which is the only United States government approved stable coin in the world. Okay. So we have a sound digital dollar that is approved by the New York Department of Financial Services. They have to do monthly accredited audits to the New York Department of Financial Services. And every one of these RLUSDs is a digital dollar that has to be one-to-one backed by treasuries, notes, T-bills, or gold. So that is going to be, in my best research and estimation, the king dollar that Trump has said. The U.S. dollar will be if you mess with us, BRICS nations, I'll put 150% tariff on you. Don't compete with this sound digital one-to-one dollar that we're going to use in this new blockchain architecture. So my next conclusion, and this is my question, is if we wanted to get rid of the decaf coffee and put in caffeinated coffee, or we wanted to get rid of the debt-based money printed by the Rothschilds and the central bankers whenever they feel like clicking a keyboard and adding $2 trillion into the economy, how would you switch out the debt Federal Reserve note with the sound U.S. Treasury digital dollar? I mean, wouldn't it almost be as easy as like kind of just doing a one-for-one swap and getting rid of this Rothschild debt paper and replacing it with sound currency that's actually backed by assets?
Well, it's a very difficult question, and this is what we're struggling with in the financial world. Is what there has to be a new monetary system, and obviously the debt-based fractional reserve system is a multi-generational Ponzi scheme, and we're at the end of our rope. So the question is, how do we go from that to the new thing, and what's the pain involved? Because there will be pain. So these are difficult questions. You know, when you talk about what it's going to be backed by, gold, I think, is going to be in the conversation. There seems to be a lot of interest in gold, and central banks seem to be running around picking up gold. So gold may be part of this. You know, I wish I knew what was going on behind the closed doors, because I'm certainly not privy. But we're heading closer and closer to some sort of Bretton Woods 3 or 4. I don't know what it is, but we're going there. And I've said publicly a number of times, I can't predict when that's going to happen. But certainly in this restructuring of the economy and these trade wars, there may be something that we're maybe closer to it than we think.
Ed, thank you so much, man. I made you get up early, and I really appreciate it. If you don't have anything else, that's all we got. But anything else you want to get out?
Yeah, just if you're an institution, high net worth individual, RIA, or C-suite executive, our report is available for purchase at Phinance Technologies, so the ph.com, and it's a roadmap. It's pretty deep dive, and you get the report, which is about 85 pages, an executive presentation on the report, and then Carlos and I going over the executive presentation.
Well, if you want to send us a link where we can get that to help you spread that around, we'll put that out.
Yeah, I'll text you the link.
Yeah, please.
And everyone can find you at Edward Dowd on X.com, correct?
It's at Dowd Edward, D-O-W-D Edward on X, and then it's at Edward Dowd on Gettr. So it's on the old Twitter, I couldn't get Edward Dowd when I signed up, but I got Dowd Edward.
Okay. Yeah, you know, somebody I got deplatformed, and some deep stater took L. Todd Wood on Twitter, and they put like some goon face on it. So I had to go to real L. Todd Wood, and I'm still trying to get Elon to fix that for me, but he hasn't yet. But
I know, it's
anyway.
tough.
Ed, thank you, man.
Thank
Go
you.
back to sleep if you want to. Take care.
Take care. Bye.